want to talk about today is about investment and how crucial investment is. And if you look at, when you're investing either in yourself or in your business or in the stock market, in the share market. Now today I want to talk about strategy and developing strategy and how to make gains from investments. Now as an investor, there's a few types of investors. One is a sophisticated investor. One is a simple investor. Simple investors, you invest in something, you want a return from it. Let's say you go to the bank, they're giving you a 5% interest rate, or they're giving you a rate, and you're going to leave it in an ISA for 3 years and they're giving you 5% back. It's a simple investment. So you make an investment on that, they're going to give you a 5% return, guaranteed, etc., etc. Bang, you've made a simple investment. You've got another investment where you invest in a business, you go in a partnership, and either if you're a silent partner, it's a pure investment. So because you're a silent partner, you're not involved in the day-to-day running of the business. So then what's happened is you're an investor. As an investor, you're just a sole investor, and then you take some amounts of the profits as a silent partner. You can be an active partner as well in the same type of investment, but then you're participating in the day-to-day running of the business as well. Now, when we move to more sophisticated investments, we look at places like the stock market. Now, that's not the only place you can invest as a sophisticated investor. I myself am a sophisticated investor. So, as a sophisticated investor, there's a few different ways to invest. There's one way where you can grow your wealth. So you need capital. Firstly, as an investor, to become an investor, you need cash flow. Without cash flow, it's merely impossible to become an investor. So without, like they say, cash is king. So this is why it's king, because then you can leverage different places, different products, different environments, and then you can use your cash to inject into different places. So as a sophisticated investor, what I do, I invest in the stock market. So the stock market, and I've cooled down on that now. Now I focus on the share market. Now, the share market and the stock market is kind of the same thing, but I differentiate it and I go through that a bit differently. On the share market, what you're doing is you're investing on shares for long-term hold. You're holding them and you're holding the shares. You're buying the physical shares and you're holding them for a certain amount of time, and it takes a long time for it to yield. So you're waiting for the yield, and then as it yields, then you take out your profits. So as your shares yield, as your shares grow, then you take out your profit. The most simplest form of this is Bitcoin. So most of you will have heard of the Bitcoin, and if you look at that and you go to the history of that, you'll see the demographics, how the Bitcoin flew. And as a share market, that's a clear example of how the share market works. So you buy the Bitcoin or the shares in a company for a certain amount of price, and as the price point rises, you sell it and you make a profit, and the difference is your profit. But it gets complicated because the share market isn't as simple as just 1, 2, 3. There's more. There's fees involved. There's going in fees. There's exit fees. There's holding fees. There's so many other fees. There's hidden fees. There's like other charges which you won't. If you haven't been involved in the share market before, you'll be stung with some of these fees, and sometimes you will even make a loss by not understanding the fees, because you could be holding a trade or a stock for so long, and you're not aware of the fees. And if you're not familiar with the brokerage fees, then you're going to be stung and you won't even make a penny. So it gets very sophisticated. Then you've got the stock market, where you will go in as a trader, as a day trader, as a weekly trader, something like this. It depends how you want to trade. You need to look at the charts. You need to look at the graphs and the graphs, the data on the graphs, and you need to analyze the graphs and figure out how you're going to trade. If you're going to trade on the monthly graph, the weekly graph, the daily graph, the hourly graph, 4-hourly graph, all of this, it gets complicated. And just by looking at the wrong graph, you could make a huge mistake. One mistake will cost you a lot of money. So this is why it gets a bit more sophisticated, and it gets more dangerous. It's more risky. The stock market is more risky to invest in. As an investor, you can profit a lot, you can lose a lot as well. So this is how the sophisticated investment goes in terms of like your local investing. Then we go to a bigger scale of investing. As a higher level investing, you invest in businesses, you invest in bigger businesses, so you invest in bigger pieces of pies. For example, there's other ways to invest as well, whereas you look at land. So you look at land either locally or internationally, and then you'll buy plots of land, or you'll buy shares in plots of land. You can also look at developments, like for example, there's people opening hotels. I looked at a client who a few years back, I had a client who was investing, who was developing a hotel, he was developing a spa, and I worked alongside with him to try and bring in investors for him. It didn't really go too well, but we looked at it, and you can invest in these sort of projects. So the projects like spas, hotels, they're big projects, and you can either go in as an investor in them and look at the returns and yields and the percentage on that. Like the percentage usually on them is very good, so they give you a good rate and good return. The only problem is you need to identify the developer. You need to make sure that they're credible. You need to ensure that your money will not be getting lost because they're not regulated. So usually these big tycoons or the developers that you're working with, you need to be careful with them, because if they're shady, they will do you over. Simple as that. They will do you over and you will lose your money. So you do not want to invest with a dodgy developer. So you need to verify the developer, and there's ways and strategies to do that. And then you can, it's called real estate. You can invest in real estate abroad or locally, anywhere. And then that is another way of investing. Many people just buy properties and they rent them, and that is one way of investing. But again, without the cash flow, it gets a bit difficult to do it on a higher level of investing. You'll stay at a local level. If you want to go on a higher level, on the next level, you're going to need a lot of cash flow, and that's what we're talking about, working with developers, working with the big people. Then when you go onto the higher level above that, you're going into government levels. Okay, so you're going to be working with certain governments. Usually these governments are in the east and in the up and coming world, so like the developing markets. And what you will do, you will go to those places and find your people over there. Usually you need to find high ranking individuals, and you can kind of get access to them through the ports. So what the best way, the method to get access to the high ranking people is through the ports, because all the ports in the developing countries are managed through the officials, and as long as you cause some noise there, you'll get through to the high ranking officials anyway, and those officials will then help you invest, or they will invest in you as well. So it depends. You can work in both ways, because that's how they operate over there.